He built the largest hedge fund in the world. He advises presidents, billionaires, and global leaders. And yet, most people have never even heard of the rules he actually lives by. While everyday investors follow generic advice like buy and hold, the ultra-rich quietly follow Ray Dalio's principles that shield their wealth, grow it in any economy, and position them decades ahead. In this video, we reveal the exact strategies, mindset shifts, and rules the wealthy live by, but you were never taught. If you want to protect and grow your money like the rich, stay tuned, because once you see what they see, you'll never invest the same way again. Subscribe now, and let's dive in. Ray Dalio's investing principles the rich live by, but you were never told. When most people think about investing, they imagine buying a few stocks, hoping for a good return, and riding the market roller coaster. But the ultra-wealthy? They play by a completely different set of rules that were never taught in school, rarely mentioned by mainstream finance, and quietly followed by the world's elite. And at the center of these rules is Ray Dalio, the billionaire founder of Bridgewater Associates, the largest hedge fund in the world. With over $150 billion under management, Dalio isn't just another investor. He's a strategic thinker, a macroeconomic mastermind, and a wealth architect who's quietly shaped how the rich preserve and grow money across generations. So what exactly are Ray Dalio's principles that the wealthy live by, and why haven't you been told about them? Let's break them down. Brain 1. Understand the economic machine. Ray Dalio believes that economics works like a machine, predictable, cyclical, and governed by cause and effect. The wealthy don't invest based on emotion or news headlines. They zoom out and analyze macro trends, like inflation, interest rates, debt cycles, and central bank behavior. If you understand how the machine works, you can anticipate what's coming next. Ray Dalio, how the rich apply this. They anticipate economic downturns and reposition early. They understand how government decisions affect markets. They don't panic sell. They position strategically. You were told to invest for the long term. They were taught to read the machine and move accordingly. Balance scale 2. Diversify like a billionaire. One of Ray Dalio's most famous principles is this. He who lives by the crystal ball is destined to eat ground glass. Translation: no one can predict the future perfectly. So, the rich don't bet everything on one horse. They build what Dalio calls the holy grail of investing, a diversified portfolio with uncorrelated assets. What does this look like? A mix of stocks, bonds, commodities, real estate, private equity, and cash assets that don't move together during market chaos. Risk balanced, not just return focused. You might have been told to just buy an index fund. The wealthy spread risk across 15 to 20 plus uncorrelated bets. So even if one fails, the whole system holds. Key 3. Prioritize risk management over returns. Dalio's number 1 rule? Don't get wiped out. While most people chase high returns, the rich are obsessed with risk management. Why? Because once you lose 50% of your money, you need a 100% gain just to get back to zero. The wealthy use stop-loss systems, hedges, and safe haven assets. Diversify geopolitically, investing across different countries and currencies. Don't let short-term greed override long-term safety. Ray Dalio's hedge funds survived multiple global financial crises not because of high-risk bets, but because of smart defense. You were taught to maximize returns. The rich were taught to survive and compound for decades. Bar graph 4. Create an all-weather portfolio. Dalio's famous all-weather portfolio was designed to perform well in any market condition, boom or bust, inflation or deflation, growth or recession. Its structure, roughly 30% stocks, 40% long-term bonds, 15% intermediate bonds, 7.5% gold, 7.5% commodities. It's not flashy, but it's shockproof. It's designed to preserve wealth across economic seasons. Most people pour everything into the stock market and pray it keeps going up. The wealthy spread across asset classes that thrive in different conditions. Compass 5. Study history, not just charts. Ray Dalio constantly references historical events to guide modern investing, like the rise and fall of empires, debt bubbles, and currency collapses. In his book, Principles for Dealing with the Changing World Order, Dalio compares the US today to the decline of past global powers like the Dutch Empire and the British Empire. If you don't study history, you'll be blindsided by the patterns repeating. The rich don't think in months or years. They think in decades and centuries. They prepare for rare events most people dismiss as unlikely. You were taught to follow quarterly earnings. They were taught to track the tides of history. Hammer and wrench 6. Think in systems, not emotions. Ray Dalio built Bridgewater using a culture of radical transparency and algorithmic thinking. Investments were based on systems, data, and repeatable processes, not opinions or gut feelings. The rich apply this by creating investment frameworks. They stick to automating decisions using data, not mood swings, delegating to professionals or AI systems that follow principles, not panic. You were told to trust your gut. They were taught to trust their system and refine it with feedback over time. Downward trend 7. Prepare for the downside, always. Dalio believes we are entering a time of increased economic volatility, rising debt, geopolitical conflict, inflation, and societal tension. Wealthy families and funds have already begun moving assets offshore, holding precious metals like gold, buying farmland and real assets, holding more cash and liquid reserves, investing in inflation-protected bonds in emerging markets. They don't fear market crashes. They prepare for them. You were told to stay optimistic. They were taught to hedge reality. Brain final thoughts. The principles you were never told. Ray Dalio's investing principles aren't just strategies, they're mental models for how the rich stay rich. The average person is given surface-level advice: buy and hold, stay calm, think long-term. Meanwhile, the elite are applying deeper principles like protect downside risk first, invest through economic cycles, diversify by logic, not guesswork, build wealth systems, not stock picks, and most importantly, they were taught to play a different game entirely. If you found this breakdown of Ray Dalio's investing mindset helpful, hit like, subscribe, and drop a comment below. Right finger? Which of these principles will you start applying today? And stay tuned, because we'll continue unpacking the strategies the rich use that no one else is talking about.